Hello ladies and gentlemen, welcome back to another episode on this public investment playlist series. If you follow this channel, you know the drill. Each month I publicly disclose what I'm investing in this public portfolio, so I created it from scratch on January of 2022, and the goal is to have a long-term horizon. I'm not selling any stocks, I'm just here trying to build up my net worth. I started contributing like 40 euros per month. As I get older, as I progress in my career, as normal life goes on, hopefully I'll be able to contribute more to this portfolio. Everything that I say in these videos is not investment advice. I do me, you do you. Just because an investment might make sense for me, it might necessarily be the best one for you. And having that said, I always like to keep these ones a bit fast-paced. Let's open the Trading 212 app, which is the brokerage account that I'm using for these videos. You can see the total value of the portfolio right now. It's worth 3,628 euros. If I were to ask myself to invest this amount this month, it would be basically impossible with my current lifestyle. I have to pay rent, I have my utilities, my transportation, all the other social expenses that I have. It would be impossible. But if you divide it, if you do dollar cost average DCA, which is the strategy of this portfolio, each month you're contributing a small amount. That makes it a bit more feasible. The total amount invested, as you can see in the bottom of 3,600 euros, it was 2,800 euros with a total return of 800 bucks. So we are closing in on 30%. Last month the return was higher, but the performance of the pie from last month to this month, from June to July, wasn't great, so it affected us a bit. Let's see the main positions that we have here on the portfolio. Alibaba is down, Google is up, Amazon is up, SVS Health is up. Farfetch, we lost all of our investment here, so we'll see here some plays that work out well and others not so much, and hopefully in a couple of years, 5-10 years, I will look back into these videos and be thinking, oh, this was a good decision, this was a bad decision, and so on and so forth. I always find it entertaining, and it's also a good reminder for all of my friends that watch these videos to dollar cost average into their portfolios as well. You can see here the two ETFs that are the main bulk of the portfolio. The S&P 500 one is up 27% and the information technology one is up 46%. So if I had invested all my money on just these two ETFs, I would be performing a bit better, but we are here for the long term, and hopefully the picks that I've been selecting for the past 2 years and the next years will play out eventually, or not, because almost no one beats the market actually, but we will see. Only time will tell, and if you stick long enough, and if I stick long enough to make these videos and you to watch them, I guess there's only one way to find out. JD.com is down, Johnson & Johnson is more or less flat, is a bit down. Starbucks, which was a new acquisition from the last month, it's also down. And let's see here the allocation. So as you can see, the main bulk of it, 50%, is on these two ETFs. So ETF is a basket of stocks for the new people here on the channel. Then our third position is Google. Then our fourth position is another ETF, a bit more diversified, this one. It has over like 3,000 companies, and it's basically you're just investing hoping that the world will be better in a couple of years, which I hope so. But then again, the return will not be fantastic, as when you are exposed to a single sector or to a specific stock. If you had invested all your money in Nvidia, you'd be doing pretty well right now. Or in other stocks that I have here on the portfolio. If I had invested everything on Meta, I would have a return of 200%, or everything on Pinduoduo. I only had invested like €1 and now it's like €6, so this would have been really outsized returns. But we are here, I try to manage my own risk, and everyone has a different risk tolerance, so maybe you can go all out on something, but maybe I'm a bit more cautious, and maybe I'm a bit more risk taker than someone else. It also depends, comes down to your style, maybe if you're close to retirement or not, if you're young, and so on and so forth. So let's see the pies that we've created since January of 2022. You can see here, if I had invested all my money in January of 2022, I would be having more or less the same performance as now, and most of them are really positive. If I had invested all my money in December of 2022, I would be up 120%, except for the one in last month. So we invested last month 150 euros, and now that buy is worth 146. Let me see here the holding. So the S&P 500 is a bit down, JD.com also dropped, Disney dropped, and Starbucks dropped the most, and this is what causing the impact. It has not always been the case. I mean, I don't expect you to follow every single video of this series or to watch them back because I think it makes sense to watch the most recent always. But you will see some episodes where I open up and almost everything is on the red, and those are my favorite periods. It's really hard to make the YouTube video because you're basically showing, hey everyone, I'm losing money, great. But at the same time is when everything is cheap and when you can find good opportunities. Right now I'm having a really hard time. First of all, I don't have as much time as I used to be. I used to have and to dig into more in-depth analysis, so I just do these updates which are fairly quickly. But everything seems so expensive, but I've been feeling this way for quite some time, and if I had never invested I would not have this return. So imagine that in November of last year or December last year I thought, oh, everything is overvalued, but right now it's 15% up, and you can see here the case. So staying on the sidelines is not always a good solution because you're also losing purchasing power to inflation. But I'm here rambling too much. Let's go into the pie that I've created this month and what we will be investing specifically. So I created this pie which has obviously the information technology, which is my main position here on this. I really like this ETF, 30%, even though I believe the stocks that are inside this ETF are overvalued, but it's been my best performance and it's a sector that I feel comfortable and it's more or less within my range of expertise. Then we have S&P 500 ETF. Then we have the all world ETF, so this represents 60% of the portfolio, so I'm a bit diversifying. I wish I could pick any more particular stocks, but it's been really difficult lately, and I like to have it a bit more balanced portfolio. This strategy might change a bit over time and depending on the periods, but for now I would like to keep this balance for today's or this month contribution. Then we'll be investing on Disney, that was a bit down. It's below $100, and for me this is always a good sign. Starbucks, we're doubling down, so if I thought last month it was cheaper, now it's even cheaper. Nike also recently had a huge drop, so we are adding a new position, a new stock to the portfolio, Alibaba and JD.com, to have 10% exposure to shiny stocks, and I really like these two stocks, even though for my portfolio I'm pretty certain that they've also or almost always have been down, but I guess only in the future I'll be knowing if they are actually undervalued as I think. So we will come here, and not all of them will execute. I'm just doing this video while I'm on a break here at work. So 15 euros is going to Disney, 7.5 to Alibaba, and you can see the rest here on the screen. This is more or less how it will be allocated. So let's press OK, and right now it will execute depending on the exchanges that are open right now. So if a stock is listed on the New York Stock Exchange, right now it should activate. If they are listed somewhere else where it's over the trading hours, it will only execute tomorrow. So always bear that in mind. So right now we are on 38%. So you can see here 90 euros were invested, and 60 euros are still in cash. We can give a bit more time, and as always this will affect a bit of the performance because we're just contributing right now with the position, and didn't give any time, so it's at 0%. So since I had a return of almost 30%, of course this is going to drop 1 or 2 percent. Thank you all for watching. As always, I like to keep this fast pace. I still have a few vlogs because I've been traveling quite a bit these past months to upload for the time capsule, but without any further ado, thank you all for watching, thank you for all the people that comment, and see you next time. Bye!